Hi, I'm Keon, a senior research analyst with Lipper. I'm here to speak to you about the fund flow activity for the week ended Wednesday, April 24th. We'll start this week's report by taking a quick look at the market activity for the week. All the major indices recorded gains for the week. The NASDAQ Composite Index, S&P 500 Index, and Dow Jones Industrial Average were up 1.32%, 0.92%, and 0.56% respectively for the week. These gains were driven by some strong economic data as well as some solid corporate earnings results. On the economic data front, we saw retail sales spike up 1.6% in March, its largest increase since September 2017. Also, state unemployment claims fell for the fifth consecutive week, down to 192,000, which represents its lowest level in almost 50 years. In support of this, like I said, we had some strong corporate earnings results, including results from Twitter, Coca-Cola, and United Technologies, which helped to drive this week's market performance. Let's turn our attention back now to the fund flows activity. We'll start by taking a look at our macro groups. Equity mutual funds saw net outflows of $3.6 billion this week. Taxable bond funds took in $6.3 billion in net new money. Muni bond funds had net inflows of $1.3 billion, and money market funds had net inflows of $4.3 billion on the week. We'll take a closer look at each one of these asset groups now. We'll start with the equity group, starting with equity mutual funds. As I said, net outflows last week of about $3.6 billion. It was their 10th straight net outflow, during which time they've seen $45 billion leave their coffers. Contributing mostly to this week's negative flows were domestic equity funds, which had $3 billion in net outflows, while non-domestic contributed about $600 million to the net outflows for the week. Breaking it down a little bit further, we'll take a look at the peer groups. On the domestic side of things, we see that multi-cap value funds had the largest net outflow, just shy of $600 million for the week. And for non-domestic equity, international multi-cap value funds had the largest net outflow, roughly about $360 million. We'll take a look at equity ETFs now. Net outflows for this group as well last week. They saw $3.7 billion leave their coffers. The largest net outflow there belonged to the SPDR S&P 500, had about $4.5 billion leave, followed by the consumer staples select sector SPDR product, had roughly $680 million in net outflows. And on the plus side of things was Invesco QQQ product, with net inflows of $1.1 billion. We will move on now to our taxable bond fund groups, starting with mutual funds. We saw net inflows here last week. They took in $6.3 billion in net new money. This was their 15th straight weekly net inflow. Largest net inflow amongst the peer groups belonged to Core Plus bond funds. They took in $4.2 billion in net new money last week. And then ultra short obligation funds had $1.2 billion in net inflows. Interesting here, ultra short's been on quite a streak. It's their 57th net inflow in the last 59 weeks, during which time they've taken in about $50 billion in net new money. So that's something to keep your eye on there with that peer group. Moving on now, we'll look at taxable bond ETFs. Net inflows for this asset group as well last week. They took in a little bit less money than their mutual funds cousins there. They had about $121 million in net new money come in. The largest individual net inflows belong to the iShares 20-plus year Treasury product at $2.2 billion, followed by the iShares 1 to 3 year Treasury product at just over $400 million. While the largest net outflow belonged to the iShares iBox Dollar Investment Grade Corporate product, which saw roughly $855 million leave their coffers. Moving on now, we'll look at the Muni Debt Fund Group. Net inflows here as well last week. It was this group's 16th straight weekly net inflow as they took in $1.3 billion in net new money. As usual, the money went into the national Muni groups, as we saw the General Muni Debt Peer Group with $1.4 billion in net inflows, and the High Yield Muni Debt Group with just shy of $270 million in net inflows. Our last group to take a look at is money market funds. Net inflows here as well last week. They took in $4.3 billion in net new money, with the big players being the institutional U.S. government money markets and the institutional U.S. Treasury money markets, which had net inflows of $7.7 billion and $2.2 billion respectively. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please go to our website, which is at www.lipperusfundflows.com. And please join us here again next week, where one of our analysts will be speaking about that week's fund flows activity.